And Yousuf, if we could start off with a quick introduction of your background. You're obviously at one of the leading VCs, IDG Ventures, so would love to hear how you got into this field and what your background was, and then we can jump into our topic today.
Yeah, no, absolutely. Well, first of all, thanks. First, I was joking earlier that I've been trying to have a meeting with you, but you invited 300 of your friends. So I'm glad that I'm very honored. So I'll definitely be put under the hot seat on this one. But and thanks again to Ali and the Park team. I think what you're doing for building an ecosystem and contributing to that is really quite substantial. And so wishing you nothing but success, and we'll continue to be a supporter. So yeah, no, I'm Yousuf Khan. I'm a partner at IDG Ventures. We've been around for about 2 decades as an early stage investing firm, specifically focused on B2B software. We invested in companies like Fastly, which went public in 2019. We invested in companies like Braze, which went public last year. And other companies like Crux, Discord, and Bolt Financial. I've been with the firm for a few years now as a general partner. There's 4 of us. Prior to this, I've been chief information officer of several companies. So I played the part of being a buyer, a developer, a broker in some cases, but implementer, somebody who's secured, architected, integrated IT solutions in enterprise for several years. I was the first CIO for a company called Qualys in the web security space, then went on to join a company called Pure Storage when there were about 500 or 600 employees. And then after 3.5 years, helping that company get to $1 billion in annual revenue, went through an IPO, of course, as well. And during that time, I worked with a number of early stage companies. I've always been fascinated by business building, and that's one of the things that I'm looking forward to sharing some of my both data and reviews that I've basically had. I became an advisor early on to Zoom during the early days. I became a customer in 2015, and later on joined the company as an official advisor. And of course, that company was an absolutely crazy success and continues to be. I was a founding advisor to a company called Mist Systems, which got sold to Juniper Networks for $500 million. I advised the CEO of developer and dev tools companies like JFrog, for example, during the early days until they went public. And then other companies like Orcus, which got sold to SailPoint, Pulse got sold to Gartner, and Level Technologies got sold to Comcast. So it's been during my time as a CIO, I ultimately worked and spoken to hundreds of founders and loved early stage companies. I was an early customer of several companies. One of them was a company called Moveworks, which after leaving Pure Storage, I joined as a VP of customer success when there were about 20 employees. And ran both business operations and customer success. So taking and working at an early stage company was something that I've had experience in. And then I became a CIO of a company called Automation Anywhere, which is in the robotic process automation space. So I've had a number of roles, both in companies pre-IPO and then post-IPO. I've worked in an early stage company. I've been an advisor to companies that went public or got acquired. And I ultimately discovered that somebody told me that I was building a venture capital investor track record without becoming a venture capitalist. And so perhaps it was time for me to be able to do that. So I decided to join IDG. We have been, like I said, we do seed and Series A checks in B2B software. We do invest globally. So yes, I've looked at tons of companies in Pakistan. I've met with hundreds of founders over time. Also, of course, collaborate with a number of VC funds. We haven't made an investment yet, but we're just at the back end of closing our, being able to basically do multiple deals, and continuing to basically talk to entrepreneurs and founders.
Amazing. I think in early stage, you kind of fit that perfect profile where you've done the operations bit, you've done the advisory bit, and seen the landscape from multiple companies around. So I think that that's really very important at early stage, because that advice always helps founders. So our topic today, I think, will be your background is very relevant, given that you've seen multiple cycles and companies go through different liquidity cycles. To kind of set the context for the topic today, which is company building in the time ahead. I'll give a bit of my synopsis of what I think it is, and then I'd love to get your take on, in general, how founders should behave in different cycles, and what they should focus on specifically. So I think if we look at the environment, and then for a lot of audience that are younger in our forum today, if you look at the post-2008 environment, we pretty much had a fairly low cost of capital in the form of interest rates. And that's created actually some of the best companies on the planet that most of us are using today, including Zoom, that was funded, I think, post the 2008 financial crisis. But at the same time, I think the environment for the first time since then has changed, where inflation is kicked in and the Federal Reserve has raised rates very rapidly. So that changes the landscape, I think, for the near term. I don't think really for the long term, and good founders will continue to find liquidity. But I do think that navigating this environment is different. So I would love to get your take on this. What would your advice be to founders in this time and ahead, and then in the future as cost of capital goes down again?
Yeah, look, I think it's really important to point out that some of the best companies are built during a downturn, right? I mean, ultimately they will, and I think what's important to understand is there is a lot happening and fluctuation that's happening in the market. So the economic cycles, ultimately, in my viewpoint, have become shorter over time. So let's just do a little bit of a history lesson. Not lesson. That sounds very Socratic. But yeah, look, I started my tech career in '99, right before 2001, and so I was part of a company which was pre-IPO, just got a Series B round of funding, I think it was, and then and I've gone through the IPO process. I've seen that, and then I've seen an economic cycle go completely down post 2000. That was really dire from everything I basically heard, and I saw that in London, as I couldn't even imagine what was going on in Silicon Valley, and so things had really dried up. 2008 was very interesting in so much that you understood that there was really a global economic crisis. But companies were still founded. There's a lesson to be learned there for ultimately every company. And number one is, look, companies take time. They take time to be built up into substantial economic value. So everybody, you get a lot of founders and would-be founders who are thinking, when is the right time? It's never a right time. It's always a right time. Ultimately, my viewpoint is that this is actually, first of all, it's monumentally unnatural what early stage founders are doing. If you think about it in the bigger context of things, there's a little bit of craziness that goes into it. You've either had a job, you've been an operator, you've had a salary and all the benefits that go with that. You've had people and infrastructure. And then you decide, for all intents and purposes, I'm going to give all of that up because I have a vision, or actually half of a vision, to be able to build a company that will employ thousands and be worth, hundreds of millions and billions of dollars. That is slightly crazy by all intents and purposes. But here's the reality of it. Companies take, quite a bit of time to get into a place where they will be spent. And that requires you to be in a place where you need to have fortitude to be able to move the needle forward and do it consistently. So there has been a downturn. So let's put into context. In 2020, the world shut down, okay? 2008, there was a financial crisis, but 2020, when the pandemic hit, the world literally shut down, okay? Everything, restaurants, our lives, mental health crisis, which was real, all of these things happened. But ultimately, what you understood is that you have a much more connected world than you've ever had before. Second, technology has been a big part of that. So before, technology was kind of in companies, and then it started to become used in companies, and now it's embedded in driving companies, right? And so you definitively saw companies which normally would have, yes, shut down or not done anything, being able to actually go to the next level. And that was driven by software. So my one piece of advice is you have to keep going, number one. Number two is, look, maybe it's Pakistani DNA or something, but perseverance is kind of part of our DNA. I mean, at the moment, a third of the country a month ago was underwater. Okay, yep. We've gone through more political issues than most countries have, candidly speaking. It's a character building environment for all intents and purposes. Okay, I'm not making light of it, but You've got to build a little bit of a skin to say, I'm just going to try and get on with things. And so the other aspect is you've just got to understand that, it doesn't require an economic crisis for a company to have an issue. Companies have issues all the time. You may be doing super well at a certain stage, and then your VP of sales leaves. And that was a major person. He or she was bringing in all the revenue. And now you've got another crisis. And then you've got co-founders who are breaking up. So there's no shortage of kind of issues that sort of come into place. Now, a macroeconomic environment has a whole number of different issues that come into place. If you're a consumer company, of course, because of inflationary pressures or otherwise, you're basically having companies, people who are going to be spending less. That means that your share of wallet becomes competitive. There's economic cycles down, so you have layoffs that basically happen. And that becomes problematic. Businesses are buying more because they have less cash and less capital coming in. I totally get that. But I think there's 3 or 4 core things I would say. Number one is you've got to be able to make sure that you have the right team who are connected together to be able to go through a downturn. So when you don't have that, you've got to be able to figure that piece out. And that ultimately is a test of a team. Sometimes the best teams are the ones who are able to basically deal with a crisis. Do I think this is a crisis? It's a crisis for tons of companies. There are layoffs, etc. But ultimately, if you have been well capitalized, number one, or if you have ultimate will of belief of what you're basically building, then you are going to be able to navigate a way through. That requires some hard decisions to be made. So here's a second core piece of advice. Make the hard decisions, because that's what you get paid for as a founder, right? And that's what you get paid for to do it. And they are called hard decisions because they are hard. It's not easy to be able to do that. You're affecting people's lives by doing layoffs or being able to change things in direction otherwise, but you need to be able to make a decision. Indecision is probably the worst decision, okay? Number 3 is you've actually got to think about the longer term and then be able to continue to basically make sure you align with that vision. That just means it takes a little bit of time. Let me give you some examples. A company like DocuSign, which has been in the e-signature business, went public, I think, after about 17 years. Okay, Smartsheet, which has been a low-code, no-code solution for workflow, both collaboration and process, went public after 14 years. Okay, now in the downturn, some of the best opportunities come into place because actually you're able to do the following. You're able to build out a product with some degree of being able to actually understand where the market is. You're able to get more signal, candidly speaking, because if people aren't buying, that they're trying to basically be, try and drive innovation and try and be creative in terms of solutions that you're going to get. So even the biggest companies are trying to do more with less. And so therefore, you can actually figure out what those problems are. Well, yes, the talent pool becomes a little bit questionable at times, but yeah, there are a bunch of people who will unfortunately be in not a great situation, and they may want to work at a startup, not just because they have a job, but they can say, well, this is an opportunity for me to take a company to the next level, right? So whilst I'm not a completely eternal optimist, ultimately, I believe that, if you are at early stages, especially in the startup community, if you're able to articulate a good vision, and articulation and the pitch is one of the biggest problems that founders have. They come in, they've got great ideas, etc. They've actually built out an MVP, they've hired a good team, and they can't do that. So the other thing in a downturn is you've got to be honest about what the situation is, but how you build a long-term company. Just think about this, right? If you go in and start basically saying, well, we're running out of capital, or, we're short of cash, or by the way, we're pretending like, well, we're just opening up another round, etc. The reality is that investors know this. They're living in the same world that you are. And so as a result of that, you basically have to be very specific and say, look, in the longer term, this is where this company is heading. What data do we have to support that? Some early set of customers who have been retained. We've done everything we can to retain that. Customer experience wins the day. Customer stories win the day. Second, we have an established team which is going to basically stick with us. Number 3, we have, say, an existing set of investors or more inbound coming in that want to basically believe in this market, right? And so, to kind of summarize, and it is you asked a pretty loaded question, so I'll get animated about it. So please.
No, please. This is great.
It's important to be able to drive as you basically would when it's a good time, right? Like early stage companies just take time, and so you have to continue to drive further forward. The moment you do think about failure in some way, you're going to make decisions which will not help you in the longer term. So when you first start, so my biggest piece of advice is when the market is in a downturn, go back and look at your original idea and the vision you had and the intention you had to be able to build a company for the longer term. And that, if that doesn't give you energy and motivation to do it, then you're probably in the wrong place, right? Because remember, you started this when you had all of the, you had all the trappings around you. And then you were giving all of that up to be able to go to the next level. So it's kind of important to be able to do that. Okay, I'll stop there because that was a long answer to a very good question. So I will take it from there.
No, it's I think you highlighted some great points. Some key takeaways, especially when I look at the Pakistan ecosystem. Just some thoughts, and I'd love to get your input on this as well, because I'm sure there's a lot of young, either aspiring founders from Pakistan or first-time founders that have raised capital. So they'd love to get your input from a Silicon Valley approach, and especially your global VC.
Yeah.
So one of the things, yes, I definitely do. This is a discussion I have that, look, building a company is a long-term game. It's not about a couple of years of safes and getting higher valuation caps, but in reality, you're going to go through trials and tribulations, and it's entrepreneurship is 10 times tougher than a job. And it always looks easier initially because when a person's leaving, they think if I can raise a couple of $1 million, that looks like, especially in Pakistan, looks like a lot of money, and we can last for a long time. And so the mindset is different. One thing I what I wanted to get your input specifically is that in places like Pakistan, where there is a capital scarcity, we're definitely, compared to more developed markets where there's venture capital is a risky investment altogether, and Pakistan is an additional layer of risk on top of risk. Given the macro risks here, how would you advise founders to go about in terms of building product, focusing on actually making sure that there's a product market fit and user engagement in their product, versus in times when you're just trying to raise and compete on larger rounds, which became the norm in 2021. And I understand it because even VCs started competing on how big the rounds were, right? We all got caught up in it. Yeah. So what would your advice be to founders in this environment, particularly in Pakistan?
I think the biggest advice I would give is that you've got to be able to try and keep moving forward by being able to get as many data points as possible. And people make this mistake. They basically speak to a very small set and they say, well, that's great, and we've raised a bunch of capital, let's go build. But in this environment, you actually have, I wouldn't say it's a luxury, but you have the opportunity really to be able to go and be able to get one of two things. One is build a pipeline. So there's a bunch of companies who can't buy right now. There's a bunch of customers who can't buy right now. You know what? There's absolutely no reason why you can't be able to get some sort of validation and actually be able to understand what their business issue is. And that applies for both B2B and consumer. Okay. Second, and probably most importantly, is you've got to be able to try and iterate the product map in a way that is relevant. These 5-year plans don't typically work. You can assign and align a vision that you basically have as a tech-based business. But remember, the software industry is imperfect by its very nature. Okay, so what's required is you kind of need to do a level of QA, which is kind of continuous. And I think that's kind of really important. So it's important to understand the quality assurance is not just about the software, it's about the business itself. And that requires a little bit of iteration. So understanding product market fit. Remember, the product market fit is really comes down to a few things. One, it's actually customers who believe in it and they'll buy it. But it's also how they understand and how the product resonates with them. You can't control that. Do you have any idea how many people consider, some of the companies, and I'll give you a challenge. If you're an early-stage founder, go and try and speak to a common connection and ask them, if you know a customer, and ask them how they would describe your company. And I guarantee it to you, they will describe it in a way that you are horrified or like couldn't believe that they basically could say such good things, right? And so that's a key part is, so one is get a number of data points, reach out to as much of your network as possible. I find it astonishing that early stage founders do not, look, what Ali's doing and being able to build up this forum is phenomenal. And I don't think enough people actually give him enough credit. But I think the other part is, this is a community of people who are like-minded, who are going through similar journeys. And so, yes, there's a bunch of people who will not respond to you. But I can assure you on my side, I know I've been very responsive as basically I can at the very least. But what I will say is, how we should be able to build together. Because ultimately, one of the reasons that Silicon Valley was successful and why you have the kind of culture that you have here, which is now being put together, it comes back to one word: community. The more you're able to basically build along those lines by being able to connect to fellow founders about how they've been able to build companies, investors, even if they don't invest, right? Being able to talk to prospective customers and existing customers, and sometimes even former customers. How many people have actually gone back to a former customer and says, can I find out what went wrong? Some of the best companies that I've seen are ones where I was a customer of a company and I decided not to renew. And that founder reached out 3-6 months, sometimes after a cooling off period, and said, can I just ask what went wrong? And some of those companies have gone on to become unicorns because they were able to listen and understand. Look, in the bigger scheme of things, which it's done the day in the technology business, you're trying to basically build out a product which people are going to buy. It's a very democratic process. The reason it's democratic is people will typically vote with their purchase orders or their checkbooks or their credit cards, right? And so if you think of it from that vantage point, you've got to be able to try and plant as many seeds as possible. And the ultimate aspect is you've got to be able to figure out a path where you're able to take a product to market. And sometimes that is not, most of the times it's not linear. The line of progress is not drawn straight. So you're going to go through this, but the more data points that you have, the better it is. And I don't think people do that enough, candidly speaking.
No, the amazing points. I think one of the things that I think that founders are, especially in Pakistan, are going to encounter, not in this time, but they've encountered, especially in times where there's a lot of funding coming in, is resource scarcity. And you mentioned another very important point of like effectively a VP of marketing leaving, having a significant impact on your business. What would your advice be to founders specifically about team retention in this time? They've had to do a lot of layoffs, some of the companies around the world. Obviously, they have to have that skill set of creating that team cohesiveness. What have you seen in companies you advised or worked with in the past, for a takeaway for a lot of the founders?
A couple of key things. One is, if you're going to be doing layoffs, remember the human beings that are involved here. They may only be a line item on a spreadsheet for you to be able to reduce your burn, etc. But there are human beings who have families, who've got careers, and be able to do that. So being able to actually understand that in the bigger scheme of things, it's actually important to be able to treat people with respect, irrespective of the circumstances. I think it's very important to be able to do that. It shows the quality of a founder. And candidly speaking, in the societal change we've had, when we've had more conversations about workplace and culture and ethics and behaviors, I think it's important to be able to do that, okay? And you have to do that with authenticity. Second, and probably most importantly, is you've got to remind them of the vision, right? And so articulation and communication of why you set out to build this company is something that people just completely forget. They treat it as a business, which it very much is. But remember, it's a collective of people who are trying to build something very new, probably sometimes very controversial, so probably sometimes something which is against the wind, right? In some way, shape, or form when it comes to the industry. And you've got to be able to remind people of that. And it's okay when everyone's lives are different and they've got to be able to make decisions. But ultimately, you've got to be able to understand from a retention standpoint, remind people of the vision. And then the other piece is think about their part that they're going to play. Look, some of the best players in any sports perform when they get traded to another team. You'd be surprised, right? You're just not in the right team sometimes, okay? And as a result of that, once you find the right team, you're able to basically do it. I think the best thing I've seen about early stage companies, why I went into venture. Well, I went into venture because I wanted to see companies being built. The economic returns in venture, most people don't realize, come after 7, 8, 10 years, right? I mean, Pure Storage, I joined, that was it is the fastest growing systems company on record. It built out a data storage product. It was founded in 2009, okay? Not like right at the tip of the financial crisis. When the financial crisis hasn't even absorbed into the global economic, John Colgrove, and John Hayes decided, well, we're going to create a new data storage company in a competitive space, by the way. which, most people were, but it was a engineering problem that they wanted to basically solve for, which was moving data storage to flash, which is new technology, and it wasn't being used in abundance in data centers. And they wanted to basically change the industry. Zoom, same thing, right? If you think about it, no one was saying, well, I want to be able to put in a new video conferencing software in 2013 when Eric Yuan had left WebEx and started creating Zoom, right? But the reality is he understood that the impact of that product and the approach, both architecturally from a software standpoint and the customer experience, those are the common denominators that have typically happened with category creating, but also companies that have lasted long term. They focus very heavily on customer experience. You could be a very small company or a very large company, but if you're not able to retain customers, then you're not able to retain talent. And that's why there's a correlation between that. So when you think about talent retention, think about, look, what else can you basically play? Sometimes you have to be able to find the gems in talent retention and talent management are when you're able to figure out that there are players in your team who are able to basically step up and do things which you didn't think was possible, right? And they're able to basically play a part. And so, yes, you have to make the cuts. And I've talked to, founders and talking about that as you basically plan, if you haven't been well capitalized, if you've got high burn, but ultimately you think about, can you reconfigure the team? Some of the best companies is, can you reconfigure a team to be able to go to the next level? And I think those are the ones that I would strongly advise that they think about that in terms of the team they have, the gaps that they need to fill, they haven't filled, and can somebody actually step into that?
So I'm going to move even now earlier stage in terms of the ideation stage. So one of the questions I always get, and I have my own view, but I'd love to get your view since you've seen some of the major companies like Zoom even in the early days. The type of co-founders. First, I get a question: how many co-founders should there be? Single founder versus multiple co-founders. What type of teams have you seen work best? Is it a technology co-founder partnering with somebody in the operation side, or is there just no mix and it's just how people just work well together?
The best founders are the ones which have the best alignment, right? And they are able to sort of connect and actually understand that they both agree on a couple of things. One, the problem is real, right? I'll be perfectly honest. And this is just my school of thought. I've never been excited about a founding team, which is like, well, there's something happening in this industry, which I've got no experience in at all. But, I may be able to go in. And that's a totally legitimate way to be able to build an economic return. Build a company, serve a market because you see it. It's happened over centuries. I totally get it. But at the early stage, I think because you're making a bet on the team more than anything else, you've got to think of a couple of things. And so my advice to founders is as follows. When you are not just presenting to an investor, but even think of it from a customer vantage point. People forget this, right? But even a customer, I've been a customer, I've been an advisor, I've been an investor, I've been an operator. It makes a difference when they think about the team that you basically have. They ask the question, well, do these individuals get along? Are they aligned? Is this the right team in terms of who's doing what? Right? So number one is, if you're a single founder, that's fine. I don't think there's any perfect formula, by the way. I just believe that. Okay. The reality is, what do you need to build a business for the longer term? My viewpoint is you need to have, if you have strong technical depth and you have, you have to be honest about your weaknesses. That's how you find the right co-founders. The best teams are ones where people complement each other in terms of skills and being able to say, look, phenomenal engineer or phenomenal salesperson, but doesn't know about how to build a product. And we've got somebody else doing that. Founder breakups are the worst to be able to deal with. It complicates a whole bunch of things that sort of come into place. And it has downstream impact. So I would basically advise a couple of things. If you are an early stage founder, find people who have like-minded philosophy, spend time getting to know this founder. Think about how they make decisions. Think about what their philosophy is about company building. Why are they getting into this thing, right? All of these things typically matter because you don't realize that actually when you're a 2-person team or a 3-person team, everyone's doing everything. Now, you get into, a 10-person team. And even at that stage, you start to basically see difficulties. Well, why do we hire this person? Why should they do all the disagreements? So ask yourself, how do you deal with disagreements? Everyone can agree on a bunch of things, right? We'll start supporting the same sports team in some way, shape, or form. But think about how you are able to deal with disagreements and be able to do that. Second is think about the skills that each of them bring, right? And number three is, and by the way, some of that skill may well just be about culture. You may want to be able to bring somebody on board because you're well capitalized and you just believe that what they've been able to do at previous companies or the type of individual they are, that they can build on talent retention and motivation by doing their particular role, but being somebody who can help build this company for the longer term from a cultural standpoint. That's totally fine, because that's a talent retention, talent acquisition technique, right? So I would look at it from those vantage points. I don't think there's a perfect formula. I think it's about complementary. I think it's gaps in the skills and what are required. I think it's about building pipeline. Most people forget this, right? You think about hiring for the short term, build a pipeline of candidates. Every meeting that you have with somebody is an interview. It may even be with a customer, right? I mean, so you may find the best people who are working with you and joining you in a way that is surprising, but the more that you're able to do that, the better it is.
Yeah. No, myself, I don't think it's more about how a person's executing, but I've invested in multiple single founder companies. I've invested in a husband and wife combo, which some people are worried about. And I've invested in companies with even 3 or 4 founders. This is a two-part question. One is dilution. So a lot of founders, when I speak to them, especially in Pakistan, you've been in Silicon Valley, it's a long 30-year history. Most people that have worked in the industry understand dilution. The expectation is that they're expecting to own the majority of the company even when they exit. What are your thoughts on that? What should the mindset be? And should it be more focused on building a company and realizing a vision that you have cohesively, or should people actually play defense on their equity?
Never been a fan of dilution. I'll be perfectly honest. Why? I mean, and maybe it's a controversial school of thought, but ultimately, if you know that you're going to build a company over the longer term, right? And I say that I've been repetitive in this, but I want to make sure the message gets through. Some of the founders, when the company went public, it was worth several billion. They only had a couple of %. Yeah. And they were fine with that. They were totally fine with that. Okay. So I actually think it's the wrong way to think about, and it may be controversial. Maybe it's the wrong way to start thinking about it because you just don't have the proof points, right? So what do you ask yourself a fundamental question? What do I need to build a successful company? Right. And in order to do that, if you basically have a high quality investor, right, like Faisal Aftab, I mean, let's not hold back here, sir. I mean, you're an investor that people are going to come to not just for investment, but it is value add. You've got the data points. You've been able to see a history of founders, good, bad, and ugly, and you're able to basically provide intellectual input that basically that is valuable to them. That's worth basically having on the board. That's worth having on the cap table, right? So I think, and by the way, data from last year shows it. So some interesting points. $320 billion was invested in startups last year. That's in the US alone. About 60 billion was invested outside the US. 220 billion was raised last year. So by the way, for anyone who's trying to figure out building company, this is a great year. We've just signed our 6th term sheet. People are actively investing. There's a lot of dry powder out there. And VCs, it's our job to be able to deploy capital. The point I'm basically making is, you've got to think about dilution in a way which basically says, what do I need from a value add perspective to do that? There's a bunch of companies that raised money last year at very inflated valuations. And I'll tell you right now, a lot of those founders they were thinking about dilution first. They were thinking about the company last. So here's what happened. They basically raised at a probably 90x to 100x multiple of what their existing revenue was. And they raised only a small amount on that valuation. So they didn't get overly diluted and they didn't give up equity. Well, in order to grow into that valuation, now you've got to hire all these people. You've got to basically spend all this money, get all the marketing in place so you can grow into that valuation, right? Well, congratulations. Unfortunately, with that thought process, which is short-term thinking, you have an economic downturn. Now your customers are not basically renewing or not buying as much. The salespeople are trying to basically figure out where they basically go. They start leaving. You've started doing layoffs. And now you're running out of cash. And so now you're basically doing another fundraise to be able to recapitalize the company, and you're doing it at round. So if you think about dilution from that vantage point, it doesn't make common sense. By the way, with the utmost respect, and maybe this may be self-serving, you're coming to venture capital firms for investment. We have a job to do to be able to raise funds and, actually give returns to our investors. So as much as it may sound a little bit, problematic when somebody says, I want 15% or 20% or 25%, that's a negotiation that you need to have. Here's how you negotiate that. You talk about what you need and how you think about the company. Maybe it's the option pool that you want to have for the rest of the employees and the hires that you're typically making. Think about how you're able to value the company. If, having 50 or 60% of something is better than having 100% of absolutely nothing, right? If you walk away because you said, well, they were asking for too much, that's in unreasonable times, that's totally fair. But then you've just stopped yourself from building a company and taking your project to the next level, which you basically had. And sometimes those hard decisions are typically made. The best sort of funding, customer revenue, no question, right? And when you don't have that, you need to basically have investment. And guess what? Unfortunately, venture capital firms have to basically think about returns just like everybody else, just like you do. So that's how I would basically, I would not start with thinking about dilution. I would think about company building and how you basically do that.
Absolutely. And I think that your last point is the key of how founders should think in general. If you're thinking about building a company, it's really a passion, and you have to treat it like. And I mean, a lot of the founders and many of the founders here are so young in Pakistan that as they get exits under their belt, even if they didn't make that proverbial $1 billion and become a billionaire that they have in their mind right from the start, you will come back and live to build another company. Look at some of the best founders in Silicon Valley. They built multiple companies.
Look, I mean, I'll give you, so by the way, I'm sorry to interrupt, but some of the best, you learn more from failing than you do from success, right?
Exactly.
So what's important to be able to realize that is take that on board and be able to understand that. We've got a bunch of questions on the chat, which I want to be respectful of, if that's okay, Faisal. Actually,
let's jump.
We could basically go through some of those.
Ali, should we jump to some questions also?
Yeah.
I'll let you, Yousuf, I'll let you take a break.
Yeah, so I'll quick fire them, and happy to basically make sure, and I'm going to give some actions at the end of this, and we can basically make sure we do that. Okay, so one is, how do you stay positive and keep trucking when nothing seems to be working? If that's a plug for Keep Trucking, which used to be called, well done, congratulations, that was really well done, basically. I know the company's changed its name, but Shoaib, big fan of yours. Look, ultimately, this comes back to having both a brain trust, but also having a group of people around you who will continue to basically be supportive, right? Again, you can continue to fight in certain ways, but it's a lonely job being a founder. So build a network around you and build a group of people around you that are able to basically help. It's amazing how resourceful people can basically be. And if any country and any group of people who knows how to basically be resourceful and be creative, it's Pakistanis, right? And so I think it's kind of important to be able to do that. I'm being very specific. Set yourself a quota. There are 5 people you need to speak to every single week who you have not spoken to, or you haven't spoken to for the best part of a month. You have to reach out to them. You'd be very surprised just being able to talk and being able to talk through things. It actually makes a substantial amount of difference. Okay. Can you share some examples of the best pitches you have received? Yes, I have. The best pitches in short form go along the following lines. One is being able to actually talk about the problem at a level of depth. Don't make generalizations. Oh, this is a scam, or this doesn't work. You can't say that. You actually have to go through levels of depth. Number 2, why you think you are able to basically solve this. What is so hard about this problem? Number 3, the pitches that go well are the ones which talk about why now, why the market needs your product, why you're basically seeing. Number 4, being able to talk about what you've done to be able to get to this. I can tell you for a fact, if you send me just a pitch deck, that is 0.05% of progress. unless you've been able to talk to every one of those slides at a level of depth and research, right? That's what it basically takes to be able to do that. And so, and number 5 is, I say this with respect, please practice. I know it takes time. Like, there's more than enough resources out there. Think about a compelling way in the venture standpoint, if you're raising money or otherwise, or if you're going after customers, people are hearing pitches for prospective products as a customer, and they're hearing prospective pitches for investment. So take the time to be able to practice. When you don't have that, you may not be the best presenter, or you may not be, then get the people around you to be able to do that. That's when you need a co-founder. Think about it from that vantage point. You need a co-founder who can help you sell. That's a question. There's a team assessment that basically happens in there that you need to be able to do. When bootstrapping, it is tough to build teams. How do I go about doing it? Okay, well, number 1 is you got to beg, borrow, or steal, if I'm perfectly honest, right? You may not be able to present a full pitch deck. Sometimes that doesn't work for being able to work with employees or be able to do that. But ultimately, it's being able to drive a message forward by being able to talk about what the problem is. You have to have, if you're not excited about what you're building, nobody else is either. So, sometimes that is ultimately required. And sometimes it's a complete miss on people. Now, look, I love what I do. Let me just be brutally honest about it. It's great. I have a best job in the world. I love talking to founders. And that's why when I speak to investors who basically, they totally get it. They're like, this person is doing it for the longer term. He's excited by it and he wants to do it for the longer term. When you come in and basically are like, well, this is a problem and I think this is one way of solving it. With all due respect, you're one of 100 people who can basically do that, but you don't have the excitement, the passion, or the drive to be able to do it. And that's what it basically takes. Because from an investor standpoint, I'm basically thinking, well, if I get them in front of 100 customers, or if I basically refer it and there's a problem, do they care about it? Can they basically do it? And I think that's important. So what is the best way to approach global VCs in Silicon Valley? Okay, it's a very, very good question. So one is intros. Doesn't have to be warm intros, by the way. Warm intros are great, of course, if you've known someone, but they can't be warm unless you've actually built up a rapport and got to know someone. I've done tons of intros for founders in Pakistan to Global Venture. Now, of course, I'm going to be inundated on LinkedIn, and I'm totally fine with it. It will take me a few times to be able to respond. Please be patient. I'll happily do that. Second, speak to Ali Fahd. Seriously, the guy is the most connected person. I mean, I thought I knew a bunch of people, but that guy knows more people than anybody else. So, you know what? Maybe reach out to him and say, where can I be able to sort of get guidance? These forums are important because you'll be able to get connected to them. Number 3 is look at a venture firm's investment strategy and then be able to basically reach out, and you have to follow up. Have zero sympathy for me and Faisal. I'll say this right now. We are in a very good place from being able to invest and deploy capital and work with founders in companies. We're building a firm and we're investing. But, you want to follow up with us and we'll kindly say no, I'll happily basically do that. But that just requires a little bit of persistence that needs to be able to do it. And by the way, if it's not relevant, if you're a consumer or an ed tech company, trying to basically pitch a medical devices venture firm, it doesn't work it. So you may want to go wide, but that doesn't typically help. It has to be quality and relevant of the actual pitch, basically.
Yousuf, I will add that, the people that have persistently followed up with me, even if I missed them the first, second, third, eventually the fourth time they got my attention. And so I used to think, I myself, I used to think that I would get annoying. So I was hesitant of doing it. Now I've realized even when I'm fundraising for my fund, I actually do follow up quite a bit.
Yeah,
so it works.
Totally. I mean, that's the key thing. And by the way, that demonstrates persistence. And that basically means that if you were, the way I look at that is basically like, interesting. So if this person was was basically looking to close a customer, they would do everything they can to be able to basically do that. That actually makes sense, right? Some of the best by the pitches, I won't name his name, but I remember I wasn't able to meet him at a conference here. He'd come from Pakistan. And he said, look, and he was just very comical in the way he did it. And he's like, look, I know you're super busy, but I'm at a cafe nearby. Not that he knew where I lived, but he knew. He says, just give me 15 minutes. And I have to give him a lot of credit, right? That just takes, and that's really those are the best stories, basically. So yeah.
Excellent.
Okay.
I think you got so many questions. We should just do Q&A since.
Sorry, Faisal. I don't know. I
No,
hope
no.
this.
These are great questions, actually.
Okay. Well, how do you? Yeah, they are very good questions. How do you hire your first C-level employee? What are your thoughts on giving them equity or bonus incentives? Very simple, actually. You'll give them the equity and bonus that you think is fair and that they think is fair. It's a negotiation. So the benchmarks can be given left, right, and center, but ultimately this will be about by the way, if you make a hiring decision and you have a bad taste in your mouth as a result of it, it's the wrong decision, because you're going to come back to that. And you may be able to forget it, but it's going to basically affect you. So my advice is reach out to the network. What are other founders basically doing, right? They should be able to ask. If they can't basically, if you're not willing to reveal directly, give some range. I would give them between 0.5 to 1%. I would basically give them X 100K in terms of in salary, or there's a bonus component to it, right? I do that all the time. So I think it's important to be able to do that. How important is it for an emerging B2B SaaS product to think about global rather than just local? I think it's important, but I don't think it's necessary, right? So do you know how many payroll cloud companies there are in Indonesia? There's like 7 or 8 of them, right? So you think about that, like it's a big market. Now, the counter argument to that is, well, is it really a big market about the level of buyers? Again, go think about it. Incremental in terms of what you want to build. Look, you can't get Silicon Valley metrics because you don't have the economic structure that is there basically in California in terms of buying and maturity and et cetera. So it's a different market. So realize that and then be targeted in terms of how you're able to basically go about doing that. And I think that's very, very important. Faisal, do you have another couple of questions on your side? And then I'm happy to answer a few more, and then let's come up with some actions that we can basically move forward with.
Yeah, so I think on the stream we've got all sorts of founders from Pakistan. Some are actually slightly on the growth stage side, or getting to the side where the company's maturing. Given that you've seen the journey in some of the greatest companies, and I'm going to keep saying Zoom since we're on Zoom.
Thank you.
Just to how did you see the culture change, the founders change as we've shifted from, let's say, pre-seed, seed, Series A, and then Series B? Because I think the type of investors you encounter also change.
Yeah.
And so the mindset has to shift a bit. So would love to get your views on that and from your experiences.
I'll quote Shakespeare, right? If you are true to yourself, you never have to lie to anyone. And that's how I basically think about culture. Okay. Pure Storage was successful. It was in a competitive space. The technology was good. It was great, but yeah, it could have been better in some areas. We've lost a bunch of deals, etc. That's totally fine. But the culture was the best job I've ever had as a CIO, no question. Okay. Collaborative, open, upfront, honest, transparent, like just ownership. There was just a way that we had basically, but one of our biggest problems as a company was a lot of people wanted to basically come to work. A lot of our customers wanted to work for us. I mean, it was just bad, right? So the thing about culture, and I'll put a bunch, I'm not doing sorry for the shameless plug, but I do a bunch of blog posts about how you basically think about company culture. But the key thing that I would basically think about is it's a representative of you as a leader if you're a founder, okay? So you can think you got away with stuff. I'm telling you right now, I'm giving you notice, you ain't got away with anything, okay? Because people aren't stupid and they actually realize this sort of stuff. So you can continue to basically think about doing things which are, let's just say, slightly, not really on the right level. And so you've got to be open and honest about that. The best foundation for a good culture is the one that is able to basically scale. And it comes down to a couple of things. One is enablement, which is being able to up-level, right? The best cultures, if I wanted to give you a template, one is think about how you up-level everybody else in their jobs, right? And that basically boils down to in terms of the decisions you made, how you treat them, how you compensate them, how you're able to motivate them, all of those things come into place. Second is to think about what part they basically play, okay? Number 3, you have to define yourself as a leader. I'll give you 2 schools of thought. Frank Slootman, CEO of Snowflake. He sends out an email pretty much every week and is giving an update on the company, what his feelings are. And some of those missives are, some of you won't survive. And guess what? As awful as that sounds, people know where he stands. He's not a warm and fuzzy guy and all that sort of stuff. He's like, I just want to win. I'm a competitive guy. I think that's the culture you want. If you want to be part of that culture, go work there. That's totally fine. It does not for everyone. Then there are others who are like, look, I just want to build a great company of great people. And ultimately, I agree with that school of thought. If you are passionate about something, success follows. That's my school of thought. I just believe that in the longer term, right? And so the other aspect about culture is when you have a downturn, this is when it starts to come out. How you make decisions, how you interact with people, this is. So my biggest piece of advice is just founders don't have enough think time. Just take a step back. It really helps. A close friend of mine gave me this advice. They said, she said, you've got a lot of things going on. Just take a bit of a step back. Have a degree of patience about where you want to be able to take this company to the next level, where you want to be able to move towards, both personally and professionally. And I think that makes a tremendous amount of difference, right? So I basically call it a proverbial kind of walk, right? You just, whether it's mentally or otherwise, you actually need to think about, why did you start this thing? Who's in this with you? How do you basically make the decisions? And communication of those decisions is very, very important. And that is demonstrative of culture, and I think it's very important to be able to do that. So, and it's an important topic, and I'm happy to do a separate conversation about that and just talk about company culture, but we're going to run out of time. So,
no, I think we're gonna have to do that because the chat box is blowing up and my WhatsApp is blowing up with questions also. I don't know how people are just actually sending private messages to me. One last question. We have about, I think, 7 minutes left. So what we can do is I'll ask you one last question and we can probably start to answer people's questions as well.
Sure.
I think they're eager. Just looking ahead, I mean, my personal view is we're in the exponential adoption age of technology, where, as you alluded to this earlier, that it was, now technology is driving most businesses. In my view, I think this is the best opportunity founders have. And by 2030 or 2033, the world is going to look very different than it does today. It's literally like picking up someone from 1987, putting them in 2021. It'll be the same level of shock in terms of the changes that we're going to encounter. So I think it's a great opportunity. Given that we have a little blip with funding, and I think that's on everyone's mind with recession and interest rates and what's going to happen, how do you see things over the next 7 to 10 years? And what advice would you give for companies? Because while it's easy, especially for a lot of companies that have raised a lot, they can conserve cash, but a lot of companies are really nervous about running out of money. And how do they keep that motivation alive? And if they do have to temporarily shut down operations and restart when liquidity is there, what is some of that advice?
So I mean, it comes back to the central topic of what you talked about, and when we framed this conversation about how you deal with the downturn. So, one way to think about a founder journey is you just have to have sheer will to be able to drive, your, idea straight to fruition. Okay. And that requires a little bit of depth to be able to basically do that. A couple of key things I would say. Number one is technology has not just been embedded in companies, it's driving companies, right? And the other reason for that is it's pretty much dominated our personal lives. So whether it's business or consumer, it's very much here to be able to be part of how we operate as a local economy in Pakistan, as well as a national economy and a global economy. So that's just a fact, and I'm not going to sort of debate that. The second is data has overwhelmed companies, right? And I actually believe that now you're seeing more data regulation and data enforcement. I think not enough companies have thought about structuring data to be able to make decisions. So data-driven decisions are probably going to be the companies that make data-driven decisions are the ones that are going to win, because they're just going to be able to respond faster in a way that most companies have not been able to do so. So thinking about that data, this is why you've seen hundreds of companies in the big data space. It's not just big companies buying this, but if you just think about it, even if you're a consumer company and you've basically got even 1,000 customers, you want to get to the depth of when they're using the product, whether they're buying a new product, whether they're trialing a new product, whether they're basically not happy, whether they're not engaged, etc. I think it's super important to be able to think about data from that vantage point. And so think of it, embed that within your thinking. And I think companies are basically doing that. The third thing is you've got to really consistently think about how you're able to operate a company. So yeah, you may have to basically reduce burn. Can you renegotiate contracts? Possibly. Can you look to basically be creative around that in terms of looking at debt, if that's basically available to you in some way, shape, or form? Are you able to talk to employees in a way that basically says, this is what a company situation is, and this is what we need to do? And some will churn and some will stay because they'll be like, I want to be able to basically do that. So I think that reconfiguration, actually thinking about how companies operate, is something that basically people need to do. There's lots of great ideas. There's lots of great products, but there's not many great companies, right? And that's the journey that you need to be able to think about. And the company building side is also about, how are you able to hire and inspire people? Can you build a hiring pipeline? Can you build a sales pipeline? Can you build a product pipeline and a roadmap, right? Which will excite investors. Can you build an investor pipeline? So from my standpoint, it's really about basically having lots of connection points in the community that you're basically part of and be able to sort of take it to the next level. I'm happy to stay for a few more minutes. I'm totally fine with that. If Ali and you are, but
yeah, I'm okay with it. So. I think we should jump to questions. So I will let you pick the ones that you think.
Well, actually, let me ask you a question, if that's okay. Sure. Right?
Yeah.
So because and then I'll
the tables on me.
Yeah, just a little bit, because you've got a really better microphone than I do. I mean, I think you've got a great Zoom setup there. I'm really appreciate that. If you think about the whole airlift situation and the macros and the question that's been posed on that, what's your viewpoint on it? And then let me give you my viewpoint.
Sure. So I think these are healthy things in any ecosystem where different strategies, I don't think there's a right or wrong answer to begin with. Yep. I think everybody has their own way of building a company. So I think if you think of the airlift scenario, really they got caught off cycle. I mean, if they were there in the lowest of the interest rates in the market, they would have basically raised the money and they would have actually captured market share and decimated everyone. And that's a fact. So those are, I don't think there's a right or wrong approach. It's just, watching the market cycles and riding them. So that's my view, especially in a market like Pakistan, where remember, one of the reason why I keep focusing on liquidity and interest rates, because it really impacts us. This is the first time that people are betting on other people without asking for collateral. That's been the kind of the glass ceiling in Pakistan that's restricted the meritocracy. And I truly believe that the people were backing, whether they succeed, fail, and they'll get back up 9 more times in my personal view. I failed multiple times before I succeeded in my first endeavor. And I think each time, as you said, it teaches you a lesson. So we have to learn to embrace failures. And that'll be something that I think it evolves the ecosystem, by me.
Right. Yeah. So I largely agree with that. And that basically talks about that venture capital is a global thing. Okay. So companies go up and down every part of the world. Okay. There have been some monumental disasters, unfortunately, both in Europe, in the UK, because it's no longer part of Europe, the US, as well as basically Pakistan, and then a whole bunch of other countries. Unfortunate, yes. Teaching moment, 100%. Okay. And so we learn from that. Right. And so as crazy as it sounds, companies go up, and unfortunately, sometimes companies go down. Sometimes companies plateau, and that's also unfortunate, but that's the way it is. Your product, it gets old, it doesn't retain, you're not basically getting into place, and that's going to basically be impactful. So it is part of the ecosystem. We will have, some issues like that, and that is no discredit to, the founders or any of that sort of stuff. I have nothing but respect for people building huge. I would much rather lose knowing that I went for the win than basically saying I didn't try at all. And I think that's something that I've taken on board. So we'll take 1 or 2 more questions, and I've got one surprise, which Ali's probably not going to like me for, but I'm going to do it anyway. What do investors most look into? A single platform company or a company having multiple tech-enabled products under their belt? there's no specificity there, right? Ultimately, you could be a single product company and build a multi-million-dollar revenue product without hesitation. If you believe that it has huge value add to, in a specific way. Look, let's look at a consumer app like The Real, which I don't use, but I've heard of. And one of the headlines I read was, well, it's growing at X%, but the usage is not that much. Okay. Then on the flip side of that, you got a whole bunch of companies which are like a single product. Look, Zoom was a single product for many years. Now it's an entire platform, but that was the longer-term vision for the company. In fact, initially there wasn't Zoom chat, right? You have to remember it came late into the game, but contact center, Zoom chat, an app ecosystem, etc. I ultimately believe that you should be building out a platform in the longer term. And I think that's super, super important to be able to basically do. So I'll do that. Okay, last couple of questions. What's the best route to reach out to me? It's crazy. You can just reach me on LinkedIn. It may take me, I'll just give some advice. It may take me some time to renew, but persistence is totally fine. I'm not offended by it in any way, shape, or form. I'm sorry if I'm delayed to be able to come back to you, but that's basically the way I operate. Okay. Faisal, thank you so much, by the way. I really appreciate that you invited, 100 of your friends to our one-to-one meeting. Hopefully I can have a separate one. So can I just insist that you can, please, when you're here next or when I'm there in December, that we can actually meet. I'd love to. And it goes without saying, look, let me just end on this note. We have to be able to, when we are in it together, is a much better strategy than I'm in it alone. Okay, nothing in human civilization has ever been done at scale with any benefit by a single individual. It just doesn't work that way. Okay, so you have to be part of a community. You have to connect with other founders. Yes, there's going to be some investors who don't respond, and there's going to be some investors that do respond. Okay, reach out to the people who are creating the forums, like Ali Fahd and others, and be able to understand that this is a journey. That journey takes time to be able to sort of get to, right? If you basically spend time ruminating, etc., sometimes you just have to move the needle further forward, and you've got to rip out the mandate to do it. It's easier said than done. Company building is hard. There's a lot of romanticization about, well, this company got funded, etc. It actually takes a long time to do it, and it's hard and it's grueling. And you know what? Some people wouldn't change it for the rest of the world, and some people are like, I'm done with this, and that's okay as well. Okay, so and look, if there's, and I say this again, look, I was born in Karachi. Okay, I turned my back on the country. Let me be honest. My family was, gone through plenty of things in the crazy times in Pakistan. And I was living abroad, etc. I tried to do business in Pakistan. I couldn't get it, but ultimately, you come back to the viewpoint. I've been super encouraged and motivated by the ecosystem that we've started to be built, right? And I think it's important to be able to actually think of it from that vantage point. I think that's really, really important. My last call to action is as simple as straightforward. Look, countries had, I would say, ground zero for climate change with the recent flooding that happened. A third of it, it's an absolute disaster. It's very easy for me saying, oh, etc. So I'm going to basically give a very small call to action. I will not invest in every company I basically meet. I can't do it. However, if you are a founder and if you have a question that I was not able to answer, etc., please email me and I will happily basically do it. Why did I mention that? For every email question that I basically get, I will be donating a small amount to a charity, which is basically contributing that. So now I'm actually giving you incentive to reach out to me, which no VC will ever do, but I'm actually doing it because it actually has a beneficial impact. So I look forward to my inbox and my LinkedIn being like, but you can't send me your deck. You have to send me a very specific question about you as a founder. And if you do that, I will happily then basically use every email and every request I basically get and put a small dollar amount to a list of charities that my good friend Ali Fahd is going to send me. And Faisal, of course, I'll invite that to you as well. I will more than happily basically do that. I've been very lucky in my life through being able to, look, still wearing it, right? Sunday morning, got the green sweater vest, got the white. I'll support the cricket team all day long. My mom still lives there in Karachi. I've got family and friends. And anything I can basically do in small ways, I will continue to basically do so. So I'm going to encourage founders to be able to reach out, connect with each other, please. It's very important to be able to do that. Be persistent and understand that this is a journey that we're all on, and we'll figure it out, because you know what? That's what we've all done. And if we don't, honestly, what's the point? So I'm wishing all of you success. Thank you very, very much for making time, for the majority of you in Pakistan who it's late to do it. Ali, thank you very, very much for doing and building a platform of consequence and of value, of impact. And Faisal, thank you for basically being an inspiration. A whole bunch of VCs will basically want to follow in your footsteps. I hope I can do that as well. And my objective is in 2023 that you and I can actually do a deal together. So I'm looking forward to that. Okay.
Thank you so much. It's been a pleasure. Thank you. Thanks, everyone.
All right. Thanks, guys. Really appreciate it.